Nasdaq lists AI-powered crypto index for top 100 coins. The world's second-largest stock exchange, Nasdaq, has listed the AI-powered 6100 index created by crypto data provider Crypto Index. The news was revealed in a press release shared with Cointelegraph on October 15. Neural network-based analysis. 6100 is a crypto market benchmark that uses a neural network algorithm to analyze data for the top 100 cryptocurrencies, taking into account over 200 factors. Reportedly designed to exclude coins with fake volumes and rankings, the human-free tool targets both industry newcomers and professional investors. According to the press release, the data is derived from the 9 largest cryptocurrency exchanges globally and factors in the results of millions of trades alongside news releases and social media data. Only coins that have consistently made it into the top 200 for at least 3 consecutive months are included in the index, which is rebalanced monthly. Crypto Index 6100, which is already listed on Reuters, Bloomberg, and TradingView, has reportedly gained plus 1,100% since its establishment in May 2017. Its AI-based predictions reportedly perform with 82% daily accuracy. Crypto indices gain traction globally. As reported, Nasdaq and Crypto Compare partnered this June to release a cryptocurrency pricing product targeted at institutional investors, which is based on Crypto Compare's aggregate index datasets. In February 2019, Nasdaq started listing 2 cryptocurrency price indices from United States blockchain and crypto market data firm Brave New Coin. Crypto Compare has also partnered with major crypto derivatives platform BitMEX to jointly construct a real-time crypto futures dataset, which will be delivered to financial markets data provider Refinitiv. This summer, Sina Finance, a finance-focused website owned by China's major tech company Sina Core, included a crypto index into its mobile app, without making a formal public announcement on the addition. U.S. Congressman, Facebook should add Bitcoin, not create Libra. United States Representative Warren Davidson, R., has said that Facebook adding Bitcoin, BTC, to its Calibra wallet would be a way better idea than creating its new currency, Libra. In an interview for the noted Bitcoin podcast on October 11, the congressman said that part of the beauty of Facebook's unveiling its proposed Libra stablecoin is that it crystallized all of the problems that already exist on the social media platform today. Do we want filtered transactions or freedom? Davidson argued that the congressional hearings devoted to Libra this July had compounded the intense pressure Facebook is already under, noting that a lot of the questions weren't even about Libra. He said that the social media titan's bid to launch a proprietary cryptocurrency had served to intensify focus on many of the platform's existing operations, arguing that Facebook already filters content. Some people say with bias, some people say it's great, they're protecting my safe space. So do we want filtered speech or free speech? Do we want filtered transactions or freedom? Podcast host Beareash argued that the congressional hearings had nonetheless been an ideal vehicle through which observers, many of them hailing from the traditional financial sector, were able to come to a better understanding of Bitcoin through coming to realize the problems inherent to a centralized and private initiative such as Libra. Davidson agreed that this had been the effect on many he had spoken to, yet also noted that for those convinced of the need for central authorities as stewards of global finance, the hearings only cemented their antagonism toward distributed ledgers and decentralized cryptocurrencies, and intensified their desire to crack down on the space more broadly. Libra, as a means of payment, could undoubtedly destabilize the status quo, Davidson said, pointing to the fluidity with which monolithic tech giants such as Facebook and Google almost begin to acquire quasi-sovereign properties, challenging government's authority. Libra focuses attention on Facebook's prior failings. During the congressional hearings devoted to Libra this July, U.S. Representative Maxine Waters, chair of the United States House of Representatives Financial Services Committee, made the explicit connection between concerns raised during earlier Facebook controversies and the platform's bid to launch a stablecoin. Waters had already requested that Facebook halt work on Libra in the middle of June, soon after the project's unveiling. She contended that the tech giant had a demonstrated pattern of failing to keep consumer data private and that it had allowed malicious Russian state actors to purchase and target ads to, purportedly, influence the 2016 U.S. presidential elections. U.S. lawmakers have also pointedly asked Facebook how they could be expected to trust a firm whose collection, storage and misuse of customer data had landed it a $5 billion penalty. Bitcoin price flat at $8,300 as moving average indicators flip bearish. Bitcoin price, BTC, continued its latest sideways trading pattern on October 15 as analysts increasingly warned over likely short-term volatility. Cryptocurrency market daily overview. Source, Coin360. Bitcoin clings to $8,000 support. Data from Coin360 showed BTC/USD remaining near $8,300 at press time, having fluctuated around that level over the past 24 hours. Highs during that period topped out at $8,390, the culmination of a build-up that reversed a previous downtrend at $8,240. Bitcoin 7-day price chart. Source, Coin360. Since a sudden dip took place on Sunday evening, Bitcoin has stayed quieter, trading in a narrow range above $8,000 support. That range forms part of choppy conditions for BTC/USD, according to regulator Cointelegraph contributor Mikhail Vanderpoppy. For him, moving average, MA, prices are dictating the upper and lower bounds for the largest cryptocurrency this week. Specifically, it is stuck between the 200-day MA/M and 100-week MA, he said in private comments. Fellow contributor Phil elaborated on likely price trajectory in the coming hours and days, erring on the side of a slide lower to test $8,000. He told subscribers of his Telegram channel. Moving averages are crossed bearish on every major time frame up to but not including the weekly. Vanderpoppy nonetheless remains unconcerned about the overall health of crypto markets. It completely looks like a bear trap and overall doesn't look bad at all if you check this whole year, he summarized. At current levels, Bitcoin is still up 120% versus the start of the year. Altcoin growth broadly fizzles. Altcoins meanwhile slacken their march upwards, which characterized trading on Monday. The top 20 cryptocurrencies by market cap broadly failed to move, gaining or losing up to 2%. The exception was Binance Coin, BNB, which benefited from a dedicated exchange-traded product launching on Swiss stock exchange 6. Ether, ETH, the largest altcoin by market cap, meanwhile gained 0.5% to trade at around $184. Ether 7-day price chart. Source, Coin360. The overall cryptocurrency market cap, the bear trap described by Vanderpoppy, dropped slightly to below $226 billion, with Bitcoin's share at 66.3%. Keep track of top crypto markets in real time here. Bitcoin network transfers $1 billion for price of a cup of coffee. The CEO of cryptocurrency exchange Bitstamp has highlighted Bitcoin's BTC utility after funds worth almost $1 billion changed hands for less than $4 in fees. Bitcoin fees too small to comprehend. As blockchain monitoring resource BitInfo charts confirmed on October 14, the transaction at wallet and storage provider Xapo involved a total of 112,027.29 BTC. Previously, Bitstamp had transferred around 107,800 BTC of its funds to Xapo, paying a fee of 0.0234 BTC, or 0.0000217%. The subsequent transaction, handled by Xapo itself, saw an even more microscopic amount paid to miners to approve the funds transfer. At $3.89, the fee rate was equivalent to 4.17247627804011547%, too small to write sensibly using standard decimals. As Bitstamp CEO Naoko Drix summarized, the funds transferred in a single transaction for the price of a cup of coffee. 73 million Bitcoin days destroyed. When the first transaction took place, other commentators noted how easy it was to use Bitcoin for huge wealth transfers without the need for government approval or trusting middlemen. Nonetheless, Bitstamp sending coins to Xapo raised eyebrows for another reason. According to data uploaded to Twitter, the transaction saw 73 million Bitcoin days destroyed, BDD. The metric implies the funds involved had not moved for a considerable length of time before exiting the Bitstamp wallet. As Cointelegraph reported in August, BDD can be used to gauge investor sentiment. At the time, it was suggested that the Bitcoin price itself could be due for another bullish phase.